Hello, and welcome to the Why podcast from London Business School, where we dive deep into the issues facing you, business and society, and ask, why? I'm your host, Katie Pisa, and today we're asking, why does corporate culture matter to investors? Corporate governance is evolving fast. From climate risk to shareholder activism, boards are under pressure to deliver not just profits, but purpose. And in the wake of movements like Me Too, there's a new awareness that the values inside the boardroom and across the company matter more than ever. To help us explore this transformation, I'm joined by Henri Servaes, Professor of Finance at London Business School and co-author of the research Sexism, Culture and Firm Value, Evidence from the Harvey Weinstein Scandal and the Me Too movement. His research explores how deep-seated issues like sexism, culture and leadership diversity don't just affect morale, they affect markets. Henri, welcome to the Why podcast.
Pleasure to be here.
Henri, your paper links the Harvey Weinstein Scandal and the rise of the Me Too movement to shifts in how investors perceive company culture. It would be great if you can walk us through this and how the importance of corporate culture is valued. But first, I want you to tell me a little bit about how you came about doing this research.
Well, I've been working on topics like CSR and ESG for more than 15 years. Exploring the circumstances under which, they may add to the value of the firm. And it's a kind of a natural outflow to also look at corporate culture, because it's also kind of an intangible, just like, social capital, which we were looking at earlier. So an intangible that could potentially add to the value of the firm. The problem is that if you want to relate culture to value, you don't know whether, culture leads to higher value or more valuable firms have a better culture. So what you really need is some shock to culture. And that's where the Harvey Weinstein and the Me Too movement came in. It really shocked at least one element of culture. And that is the extent to which firms treat men and women equally. And so that gave us kind of an opportunity to look at, now that we take one element of culture and we increase its importance, how do capital markets react? And that will allow us to assess whether better culture leads to higher value.
Was there a certain moment when you thought, well, this was making a great topic for research? Was it right after the Harvey Weinstein scandal?
We've started working on this almost immediately after Harvey Weinstein happened. But as you may know, the academic process is very slow. And so it's taken us, quite a bit of time to get everything together. But of course, the advantage of that is that we could really look at what happens after, these events happened, right? If you stop in 2017, you don't know how firms responded, whether investors kept divesting or investing in certain firms. And by taking this several years later, you can really see how these events influence the behavior of corporations in a much longer run.
Of course. Can you just talk us through what measurements you used and how did you go about the research? Who did you look at and where?
Right. Well, so we looked at the roughly largest 1,500 companies in the US, partly data-driven, because for these companies, there is detailed information on the compensation of the 5 highest paid executives. And so our primary measure is actually just to look at these 5 highest paid executives and see whether there is, what fraction are women or whether there are any women at all in some sense. And, in the vast majority of the firms, if there are women, it's just one. But so that's our main measure, whether one of the highest paid executives is female. And so that's what we use to define whether a company has a sexist or a non-sexist culture. Now, by no means are we saying that if you have no women on the top 5, you are definitely sexist. And if you have one or more, you are not sexist. But it's just a proxy for what is going on. And the argument is that an organization that is less sexist would have allowed more women through the C-suite of the organization. We do then also look at other measures, which I can, if we have time, talk about later.
What do you mean when you say non-sexist cultures earned excess returns?
So we simply compare the returns of firms with women in the top management to the returns of firms without women in the top management. And we compare their returns to their returns in normal periods, and then we compare those to each other. So do firms with women earn a higher return during the Harvey Weinstein Me Too period than they would normally earn relative to firms with men, without women, so with only men among the top 5 executives during the same period. And so when you compare these two, as you point out, we find that the return of companies with women in top management is 1.3% higher than the return of firms without women in top management. And, that appears to be maybe a small number, but you have to realize that this accrues to all the firms in the economy. Usually when we test something, you look for, a merger happens or a company says this or that, and it's a very small sample of companies that do something specific. But here, it's not, we don't take a sample of companies. We really look at the universe of companies. That's roughly the 1,500 largest in the US, and it accrues to every single one of them. So it's a large number. I think it's over $200 million per company, if you look at
1.3 sounds small, but it's not.
Yeah.
1.3.
Exactly.
How did the investors respond to this revelation of sexism in corporate environments? I mean, this really highlighted at a time when people were upset, they were angry, there was a lot of emotion. What was the response you saw? Yeah, so we think that part of this 1.3% price difference is actually due to investors selling the shares of companies without women in top management, and vice versa, buying the shares of companies with women in top management. And so it's that selling alone that already has a price effect. But it's not only the immediate selling that took place, but also the anticipation of more selling in the future. And so investors really reacted to this by saying, look, it just makes no sense to have companies without women in top management. It just doesn't seem right. If you look at the availability of women in the marketplace and you pick 5 people, the chance that if you just picked at random 5 people that they would be male would be something like 3%. So it just doesn't seem right. And so our contention, our argument, which we then test in great detail, is that investors simply did no longer want to hold the shares of companies without women in top management. Now, of course, it's not like they sell all their shares, right? These are just moderate changes in their holdings. But nevertheless, these moderate changes in their holdings can have a substantial effect on the price and on subsequent behavior of corporations. So situations like this are the catalyst for small changes incrementally, which actually result in a big change overall.
A good.
Are we seeing a permanent shift in how workplace culture affects valuation, or was this a temporary reaction based on your time period of your research?
Well, I mean, it's a very good question, and I don't have the full answer. We looked at the start of Harvey Weinstein and the first 2 weeks of Me Too, because that's really when, we looked at sort of how much there was in the press, and the number of newspaper articles sort of went through the roof for the first 2 weeks. And our contention is that within 2 weeks, capital markets should have sort of figured out the consequences. Now, we looked at the subsequent month and we didn't find any kind of abnormal returns, but we have not looked at returns, further down the line. But our sense, given how companies then responded to this, our sense is that this is a permanent revaluation, because if companies thought, okay, I take a little bit of a stock price hit because I don't have women on the, in top management, but then it reverses, then you would not expect companies in the longer run to actually do anything about gender equality in the C-suite. Nor would you then, if investors probably wouldn't also react further. And we actually find that, the selling by investors, goes on for, many quarters afterwards.
Okay. How does gender diversity at the top signal deeper governance quality?
I mean, we think it's mainly sort of a moral issue, more than anything else, right? It doesn't seem right, given the available labor pool, and given that 50% of the population are women. It just doesn't seem right that you cannot find a single woman capable enough to be part of the C-suite. And so our argument is not that much about how having women there changes things, and I'm sure this is something we'll come back to there later. But our argument is simply that it doesn't seem right, and so investors think the same thing. They say it doesn't make any sense. So not necessarily from a profitability perspective, but simply because it's not the right thing to do. And if there is availability in the labor force, and there's probably something we'll discuss later, then why not seek it out and add it to the management team?
You used executive compensation and leadership roles as a proxy for non-sexist culture. Why is that a powerful signal?
Well, I totally agree with you that measuring culture is very difficult, right? I mean, there's actually two problems with this concept of culture. One is that it's actually hard to define, and then two, it's hard to measure. Now, when it comes to definition, something that a lot of scholars have used is the notion of norms and values. So norms and values that the organization has. Now, in terms of measurement, how do you measure these norms and values? It's very difficult. So our aim here is very modest. We're not saying that we're measuring culture per se. It's a very broad concept as such. We're just taking one element of culture, which we call gender equality in some sense, and we focus on that one to see whether we can assess whether there's a relationship between subsequent firm value and culture. So we're just looking at gender equality. But there is actually pretty good survey evidence to suggest that when people ask, well, why are women not rising to the top? A lot of people say, well, it's corporate culture, for example. Now, we also end up using other metrics that maybe speak more directly to the culture. For example, from the Glassdoor website, you can get all kind of ratings that employees give to companies, but there's also a free text field where people can just write whatever comments they have. Okay. And so we machine read all these comments, and then we single out those firms where more than 10% of the comments use certain words that are related to sexism, boys club, misogynistic, harassment, etc. And so we also look at that group of firms, all right? And so that's a kind of a maybe more direct measure of culture. And you find the same results. So you find that those firms for which the Glassdoor reviews had these terms that suggested that the firm was really sexist, we find that those firms suffered a lot more during Weinstein Me Too relative to other firms for which this was not the case.
That's really interesting. I didn't know you looked at Glassdoor, but that's it's still quite widely used, isn't it? I mean, it gives an open forum for employees.
Exactly. It's a widely used database, and it's very useful. And you can use both the free comments. I mean, we did one other thing actually, and that maybe would help address your question as well. Glassdoor itself also has just a box, which is a culture and values rating. So, of course, we don't know what employees exactly mean when they click culture and values. But again, you find the same thing. Those companies for which employees gave a high rating to culture and values did better during Weinstein Me Too than those firms that did not. So we do, we look at top executives, but we also look at a number of other metrics to make sure that kind of our metric is quite robust. And it doesn't matter what metric we use, we find consistent results. Those firms deemed to have a more sexist culture did worse, and those firms deemed to have a less sexist or non-sexist culture did better in terms of stock prices during Weinstein and the start of the Me Too movement.
What was the overall financial performance of the companies that responded to change and started hiring more women?
I think this is an important question and maybe one of the most interesting insights from our paper. So indeed, as you say, companies, when they saw that investors were selling their shares because they did not have women at the top, of course, companies say, well, how do I address this? And of course, given what we find, one way of addressing is to indeed hire women, make sure that there are more women in top management. And that's what we find. We find that the companies with fewer women or with no women in top management after Weinstein really started adding gradually, of course, more women to the C-suite. And what's very important then is we looked at subsequent accounting performance, typical return on assets, etc. measures. And we find that there is absolutely no change. And people say, well, what does that mean? But that's, it's a very important insight because the companies didn't have women. They hired women. And the performance was as good as it was when, they didn't have women, suggesting that the women they hired were of equal quality to the men they replaced.
Sure.
And I think that's kind of an important insight because that's what a lot of people maybe due to preconceived notions have. Well, we just can't find the women. And then if we hire them, they're not as good. And that's going to affect performance. It didn't.
That's fantastic news. Is there going to be any, do you think you'll ever carry on with this research and I mean, in some years and say that, look, some firms outperformed, having a female in a top position? Could that be a phase 2 of this research? But you haven't done that yet. But
no, I mean, we are looking more sort of at the role of women. One thing that we were thinking of doing is to kind of figure out who these women exactly are that have been hired as a result of this and find out something more about them. But I think what is key is that we should not set up women for failure by asking the performance of the companies to improve after they've been hired.
Right.
That's a silly thing to expect. So we don't expect that, right? The only standard that women should be held to is the same standard as men are held to, right? And so if performance is as good as, that's really what the standard should be. And if you some people claim, well, you add women and somehow performance is going to improve. And then if it doesn't, you see, we added women and performance didn't get any better. That is not the standard I think that people should use. And one thing maybe that also comes out of our research, but one thing that I want to stress in general is that, equal performance is what we should be looking for.
You talk about in your research a lot of the reasons why the glass ceiling exists and going back many years before this, some people just lack of availability of women for these roles. On the other side here, sometimes companies may look like they haven't tried, but they genuinely have. So we can't always blame it on the company. There are some factors, but it seems to be that this research really highlights the fact that we need to help promote women more, and that ultimately investor bias and we need to change some of the ways of thinking, don't we?
Well, look, I mean, I think this is a legitimate concern, right? I mean, firms may want to hire women, and they may not be able to find them either because there are really no capable women there, or perhaps because of the type of company. They are capable, but they just don't want to work for them. I mean, that is
the industry doesn't attract.
Yeah, I mean, that is certainly a possibility. The only thing is that when we look at the data, we look at what happens. We find that companies were hiring women. The fraction in women in the top 5 leadership positions has increased substantially since Harvey Weinstein. Firms hired women, and performance didn't get worse, suggesting that there was availability,
right.
And it was maybe just a matter of looking a little bit more carefully, rather than sort of being very narrow-minded and sort of looking in the same circles where perhaps you've always looked. What's also quite interesting in our research is we also take U.S. states and divide them into those states that are more or less sexist based on various measures.
I was interested in that. How do you determine that?
Well, look, I mean, we use 2 measures. One is based on survey evidence where they just ask people, general population in various states, questions that are very much related to sexism, like, women better stay at home, for example. Do you agree or disagree? And so we just divide states into 2 based on that.
Okay.
The other metric we use is state gender pay gap. So we have data on pay for men and women, and we just control for everything that we can control for. And then, if there's still a gap, that suggests that it's something inherent, that it's more sexism rather than skill, for example, because that's what we control for. And so we can divide states into 2 groups based on that. And we find that even in sexist states, the companies were able to hire women, after Me Too and Harvey Weinstein. And we do the same thing with industries, right? Some industries have fewer women, some industries have more women. So we also look specifically at the industries with few women. And even in those industries, we find that companies are able to hire women and add more to the C-suite. So I'm not saying that supply is not important. And of course, we all have to make sure that there is enough supply of capable women. And I'm also not saying that there are no firms or industries where women are maybe more reluctant to work in. But if you at least look at the data, when firms felt that they needed to hire more women, they were able to do so. Now, this gap between the firms without and with women hasn't completely gone to zero, of course, in our research. The gap is still there, but the gap certainly narrowed.
What role do female leaders play in shaping corporate governance?
That is not something we look at specifically, but there is research out there that, for example, if there are more women on the board, then that also affects the fraction of women in the C-suite. There is other research suggesting that the gender pay gap, for example, is lower in organizations when there are women at the top. So there is research suggesting that female leadership does trickle down through the organization. But, that's not necessarily our focus. Our focus was just on, do they hire women and what happens to subsequent performance?
So I want to talk about where governance meets social change. And one of the big takeaways from your work is that investors, especially with those with low ESG focus, actually change their behavior after Me Too. What does that tell us?
No, I think this tells us really that investors sort of got fed up and decided that it is not right to have these shares in their portfolio to the same extent they did before, because it just doesn't make any sense. And, this already happened prior to that when it came to women on boards. The three largest U.S. and investors had already decided that they were going to vote out all the board members of companies that proposed a slate of board members that didn't have any women in it. And as a result, other research, this is not our research, but other research suggests that this really led to a lot of women being added to the board. And what we're saying is that the same thing is kind of going on at the C-suite level. Now, of course, investors cannot vote out CEOs. They can only vote out board members. But one way that they can make their voice heard is by just selling their shares. And I think that's what's going on. Now, your point that these were particularly the institutions that had low ESG points to the fact that these events are really the events that led investors to change their view. If you look at investors that were high ESG to begin with, those investors probably already, cared about ESG before Weinstein and Me Too. So these investors are not the ones you would expect to now start selling and buying because they already done so. But what's interesting is if you look at the bottom set, those investors who were not particularly ESG engaged, those are the ones whose minds you would expect these events to really have changed. And that is indeed exactly what we find. A lot of the change in ownership by institutional investors comes from the lower ESG range.
So, I guess you've touched on this already, but so whether it's investor-led or society-led, this shift, it's all together.
Well, yes. It's tough to say, right? You can ask, well, does an institutional investor start selling its shares because it itself thinks that this is the right thing to do? Or is it really derived from, the people who've put their money, for example, in the mutual fund or in pension funds, etc.? It's hard to tell, whether it's the investor itself or it's from the investors in the fund, and we don't speak about that. My sense, but so this is just a conjecture, is that it's going to be a little bit of both, probably.
Markets and morals run together. And I want to jump back. I meant to ask you earlier. I think you pointed out in your research that from 1992 to 2023, there was a big change. I think it was 10% of females in higher positions, which has gone up to 63%. Can you talk through that statistic?
Yes, that we did not look specifically at that in this paper, but we've done some other research sort of looking at the broader patterns. And if you go back to the early 1990s, there were virtually no women in top leadership. And then I think everybody will know that then it's grown substantially. Now, right before Me Too and Harvey Weinstein, which was just right before October 2017, this fraction had gone up to about 40%, not quite 40%. And so, but then if you look at what happened since, and I don't think this is something that people are maybe necessarily aware of or have paid much attention to, the growth in the fraction of women in sort of the top management position has really, taken off. So it's not just that the trend has continued, the growth rate has really kind of, increased itself. And so if you take this out to now 2023, I think you'll find now that we're at about 60 or more than 60% of all firms have at least one woman among the top 5 executives. But note that the standard is still very low, isn't it? I mean, that still means that there are quite a few firms without women at all. And, before we get to 2 or 3 women, I think that's still a long time coming.
So it's still only 20% of the top positions within a company, even if they have one.
Usually, I'm sure that has grown a little bit. In our sample, it was almost always just 20. If there were women, it was usually just 1. Now by 2023, I'm sure that has increased a little bit as well, but it's still, of course, a relatively small fraction. But it is important to note that the Weinstein and Me Too events really led to a shift in that growth rate. And so it's not just a continuation of a trend.
You also talk about companies in more sexist industries and regions, and you touched on that earlier. That is quite significant, isn't it? To realize geographically, some areas are just different. I don't know if you want to talk about which areas of the U.S. I don't know if that's appropriate to say, but but I have stereotypes in my mind.
Yeah, and those stereotypes are exactly correct. I think if you look more at the south of the U.S., I think you find more of that. But it is indeed true that no matter what states you look, firms improved. Even in those states where you would think they have the hardest time improving, or they care the least about improving because of the attitude in the state. But of course, investors are not state specific. Investors invest everywhere. And so even if you are in a sexist state, even, if you are in industry with few women, if investors are starting to sell their shares and your share price is lower as a result, you're going to respond. And so this is exactly, the point of our research is to show that it's actually investors themselves who can induce firms to change their behavior when it comes to, women in top management.
Are there risks that companies only change surface level metrics rather than addressing deeper cultural issues?
2 points on this. First, of course, if it comes to having a woman among the top 5 executives, that's hard to be tokenism in the sense that, if you're top 5, if one of the 5 highest paid executives, you're going to have some serious management responsibility. And so there you are, you're not just going to hire somebody, I think, as a token. I think it's probably more difficult to say that. But then, of course, the second step is once women do reach that level, then I do think that, that will then permeate further through the organization. And as I said, there's then other research not by us, that suggests that indeed, once there are women in executive positions, that improves the status of women throughout the organization.
So is this all very encouraging for female, for women who want to get to the C-suite? Should we be looking at this as a positive step forward?
Yes, it's sad in a way that you sort of have to have these quite negative events and these revelations of harassment and sexism in not only in the film industry, but really throughout, corporate America and throughout really corporations throughout the world. It's kind of sad that you needed those events to then get, investors and firms to realize that we need to do something about it. But at least I think the positive that has come out of these events is indeed that there are now a lot more women in executive positions, at least in the top 1,500 U.S. firms. And I have no doubt that this has trickled down to other companies or other countries, although I don't have specific data on that.
Finally, Henri, what are the implications of this research for the current anti-diversity, equity, inclusion movement that we see going on?
No, it's of course, this started already 2-3 years ago, when, several U.S. states had sort of anti-ESG mandates and forced their state pension funds, for example, no longer to invest in investment managers that had a ESG focus, etc. And this has sort of also now led to the anti-DEI movement to some extent. Now, here is our take on this, right? The notion, I think, the wrong notion behind this DEI movement is that you have 2 people, one is clearly more competent than the other person, and in this context, the man is more competent than the woman, but you hire the woman anyway. That's, I think, the notion that a lot of people have, and so they say, no, this is wrong. It should be merit based, etc. But where does this notion actually come from? And so if you look at our research, when you hire a woman, performance doesn't go down. So what does that suggest? It suggests that the women that are being hired are as good as the men that they replace. And so in that case, the original premise of this anti-DEI movement is somehow wrong, suggesting that we're going to hire people with inferior skills to meet some other type of goal. What we think is you hire people with the same skills, but you do look at the full set of potential people, and maybe looking a little bit wider does allow you to identify, in our setting again, women who are equally good that you just didn't really pay attention to in the past. And so I'm not saying that's the case everywhere, by the way, right? I can only speak for that in our specific setting. But given that in our setting, and if people find that this is the case in other settings, then we sort of have to take a step back and say, wait a minute, this is not about hiring, people with inferior skills to replace people with better skills.
Right.
This is just about hiring, people with equal skills that are just having a different demographic than the people that we usually hire. And that's not so wrong, is it?
Absolutely not. No. But are you hopeful that this phase we're seeing right now will subside, or do you think it's politically driven, or is it just a blip?
Well, the anti-DEI movement, I think is there to stay for a while. I do believe that perhaps in some circumstances, it was indeed the case that maybe some people were hired that didn't quite have the same skill set. And there I can understand that people are upset. But at least in our setting, when it comes to hiring top executives in the firm, we just do not find any evidence that is the case. And I think, just getting that message out there is important so that, people indeed realize, this is not about doing damage to organizations by hiring people who are not as good as the people that they replace.
Excellent. Thank you. So, Henri, we end each episode with a signature question for each of our guests. And I wanted to ask you, why should organizations take their internal culture seriously as part of their governance strategy? And what's one action they can take to improve?
Well, culture, it's difficult to capture. But, executives left and right say that having a better culture is valuable for their organizations. And I think, in our setting, we show indeed that is the case. And so in terms of what companies can do in our setting is to just look a little better, look a little wider at who is available and who has the skill set that you need, not an inferior skill set, but the same skill set. And you might be surprised that there are people that you may not have thought of before that are actually as good as the people that are more in your narrow circle.
And this doesn't just relate to females, it relates to all of society, right?
In principle, it relates to all of society. Of course, I don't want to overstep my research. We've just looked at gender, but my sense is that this would apply to many other characteristics as well.
Absolutely. Thank you, Henri. That was really fascinating. Thanks for joining us today on the Why podcast. Have you seen culture shape governance or investment decisions in your own experience? We'd love to hear your thoughts. Leave us a comment on Spotify or YouTube using the hashtag #TheWhyPodcast. And don't forget to follow and subscribe so you never miss an episode. For more insights from London Business School faculty, head to london.edu/thewhy. The Why podcast is part of the Second 60, London Business School's 60th anniversary initiative, tackling the global challenges shaping the future of business and society.